Growing your business can mean big-time logistical questions like, how are we going to keep up with all these local deliveries? Let Uber Direct offer you a helping hand. With Uber Direct, you take orders on your website, app, or by phone. Then drivers who are part of Uber's courier network pick them up from your store and deliver them to your customer's doorstep. Sounds simple, right? Delivery just got better with Uber Direct. Learn more at uberdirect.com. What do all of these bankruptcies mean for the restaurant industry? Hello, this is Jonathan Mays, editor-in-chief of Restaurant Business. And in this week's episode of A Deeper Dive, I speak with my RB colleagues, Joe Guszkowski and Lisa Jennings, and we talk about the wave of bankruptcies this year. 17 restaurant chains have filed for bankruptcy this year already. Most of them have been filed since June, which really gives an indication that the restaurant industry is in trouble. And that probably actually undercounts the true industry challenge at the moment, given that a lot of restaurant companies are either currently near bankruptcy right now or managed to get sold in and out of court restructuring. The bankruptcy filings include Roti, the fast casual Mediterranean chain that filed on Friday, and of course, the largest restaurant chain bankruptcy maybe in history in Red Lobster. I talked to Joe and Lisa about these bankruptcies, what they mean for the restaurant industry, and why these are happening 4 years after the pandemic. But we also get into a discussion on what works to generate sales. Amid all of these bankruptcy filings are companies like Chili's and Wingstop that have reported ultra strong sales. Why are they able to do that while other companies struggle? We're talking bankruptcies on A Deeper Dive, so please check it out. All right, I'm here with Joe Guszkowski and Lisa Jennings for a twofer. How are you two doing?
Good.
Fantastic. You guys might have heard that there have been some bankruptcy filings lately. Specifically, there have been 17 of them this year, most of which actually have been filed since June, including probably the biggest bankruptcy filing the industry has ever seen in Red Lobster. So we're going to talk about sort of the state of this and what this all means. Joe, where is Red Lobster at right now?
Red Lobster is close to being sold to a lender, and they are in the process of evaluating a bunch of their leases to see if they can get a better deal with landlords. And if not, they're closing some more restaurants this week. They're closing 23 locations. So it seems like they're getting everything kind of set to sell to Fortress Investment Group, which is the owner of some other restaurants, including Crystal and Logan's Roadhouse. And that should all be tied up early next month. Today, Fortress just named their new CEO for Red Lobster when they take over, which is the Damola Adamolican, the former CEO of P.F. Chang's. So things are starting to kind of wrap up on that front, and it was a bit sad to see them close more locations this week after the first big wave back in May. But it just shows that a decent amount of their unit count is struggling.
Mm-hmm. Now, how many locations? That's what? How many locations are they down to?
Total closed?
Yeah,
120, somewhere in there.
Right. So that's like more than a fifth of their locations. That's probably like a quarter of their locations. That's a substantial
I think one
decline.
of the things that they probably learned from this is that they have too many locations for a chain of their, a concept like that, seafood concept. They were probably a little bit overextended.
Do we think so? I mean, do we think that they were overextended? I mean, is that really the issue?
That's one issue.
Yeah.
I think it's one issue.
Right.
They had some locations that were very close together. These are places that, this is like a special occasion type destination for a lot of folks. I don't know that there need to be 600 of these concepts.
Right. But there are more Olive Gardens, and Olive Garden is roughly a special occasion type place.
I don't think
Yeah,
it's perceived the same.
Yeah,
really?
I think Red Lobster is a little bit of a more. It's not fine dining, but I think it's got like the sort of aura of a more upscale place. And given the menu, seafood, lobster, it's kind of special. And also,
Yeah.
I don't know that there's as much demand for that
Well,
kind
that's
of food.
probably true. There probably isn't a ton of demand for seafood, as compared to Italian food. And that's always been kind of the big challenge. I will still maintain, you two, that probably the bigger issue is that they really haven't had as much investment. They got spun off of Darden restaurants, and while they did fine for a while, the last few years have not really been kind to the company. And then, of course, they did that stupid all-you-can-eat shrimp deal, which just pushed them over the edge.
Yeah, it was a real domino effect of problems for Red Lobster dating back before the pandemic. And it's
Lisa, do you
all
think
kind of.
that's like the worst marketing deal in history? All-you-can-eat shrimp?
I mean, it wouldn't have been a good idea in my mind if they had asked me. They didn't ask me. I'm just for the record, but I mean, I think that for a while, a couple of years ago, Red Lobster was going through kind of a marketing. They had a little marketing thing going on there with Cheddar Bay biscuits, and some prominent contemporary musicians were into it, and they had a moment that they really could have captured to try to get people to revisit this brand, and they kind of missed a boat there. I think that somehow there was a fumble of the ball.
Didn't didn't
Sad.
Beyonce mention? Wasn't it Beyonce that
Yeah,
mentioned them in a song? Yeah,
yeah,
right.
yeah.
No,
Yeah. So,
no,
I mean,
Cheddar Bay biscuits are
what
phenomenal.
Applebee's, experienced with the song, and things going viral, it was, something similar to that. Not that that's, really helped Applebee's now too, but yeah, I think there was a moment missed in that probably had to do with the seafood supplier coming in and feeling like they had a way to use the brand for their own purposes, perhaps, the loss of the real estate, that sort of thing. There's with all of these bankruptcies, I think, it's a common case of, when what is the expression, when the tide goes out, you see who's swimming naked. And that expression, I
Mhm.
think all of these companies kind of share that various
Yeah,
operational challenges that have been exposed.
yeah, right. I think it's worth noting, like I said at the outset, that there were 17 bankruptcies this year. That badly undercounts the number of problems that we've seen. Because, for instance, Mod Pizza did not file for bankruptcy. And Mod Pizza, from literally everybody that I know that has looked at that company, every single one of them described it with the same word, Lisa, a mess. Um, we have several companies that are being basically sold without a bankruptcy process because people are going in and buying the debt. For instance, Guillermo Perales buying 2 of them that way. Jeff Crowell probably buying a couple of them that way, including Lisa's favorite restaurant chain, Rubio's. And we have like restaurant chain after restaurant chain in which the lender and or the private equity owner are just walking away, and then some investor is basically getting the whole thing for pennies on the dollar. So probably what's happening right now is a little on the unprecedented side. It's a little on the extreme. What do you think this says about the state of the industry, you guys? Joe, you go first.
I think what it says to me is that the the impacts of the pandemic have lasted much longer than I think we maybe expected. I think a lot of these issues are the result of chains that took drastic measures just to survive COVID, took on debt, and have not been able to manage that given the current challenges that the industry is facing. I think a lot of it goes back to that, which is a bit surprising because I think that generally restaurants have recovered from that period, but it may take years now for the true impact to kind of resolve.
Mm-hmm. Yeah. What do you think, Lisa?
I mean, I would totally agree with that, but I also think that, a lot of people are quick to say that the macroeconomic climate is to blame for all of this. But, all of these companies were having problems, even before, arguably, the pandemic, like Rubio's, for example. So it really, again, it was just a situation where put under that much stress, having that much debt to deal with, and then having a consumer that isn't coming back to your restaurant necessarily, or is perhaps coming for things like all you can eat shrimp or deep discounts, which isn't really going to be helping your bottom line. I mean, I think that in the end is what has caught up to a lot of these companies. But what's odd about it is that there have been so many, and this year, why now? And we've really seen after. I mean, I think the only restaurant that went IPO recently was Cava last year, right? So we haven't seen, that whole thing is completely dried up. And Jonathan, maybe you can explain why that has happened. I mean, it's just interesting to me that you see, both ends of this happening at the same time.
Yeah. The IPO markets are stupid, if I'm being honest. So the the IPO markets are in the restaurant space and there were two companies, because there was Gen Korean was the other one, super small one.
I guess a couple of them. Yeah.
That's in your neck of the woods, isn't it? Like,
Yeah.
anyway.
Korean barbecue.
Yeah. It's usually, I think, when you see a lot of IPOs, it just means that public investors are really eager there are a lot of companies, growth chains that where private equity is looking for the exits, and there are a lot of investors that are just willing to put money into them and things of that nature. And it's restaurant companies, more, I think, than any other industry, really, you can only go at certain periods. So the conditions for a restaurant company IPO have to actually be almost perfect, and to a ridiculous extent at certain points. So it may or may not say anything about the state of the industry. Although right now, frankly, investors, Wall Street just doesn't want anything to do with restaurants at the moment.
Yeah.
Stocks are down for the year, on average. And even companies like Chili's doing 15% comps get pounded on that. Actually, it has been the Dutch Bros as well. If you're just something a little off about your projections or whatever, investors are just going to trash your stock for a day, and it'll take you a while to recover. As for the state of the industry, like, to me, it's going to sound a little odd, but in some respects, something like this is kind of necessary, right? Hear me out for a minute. The restaurant industry is, too many companies were over levered coming out of, going into, we were talking about, you might remember this, we were talking about there being too many restaurants in 2019. We thought the industry sort of got rid of too many locations, but there were still a lot of restaurant companies going into the pandemic that really didn't have the financial wherewithal. And the pandemic, if in some respects, actually delayed any issues that they may or may not have had, because lenders gave companies breaks on their debt. If landlords gave companies breaks, everybody got a break. They got financing that got them through the pandemic. The pandemic did worsen a lot of restaurant companies' finances, and it's worth remembering that was a singular event in the restaurant space. Singular. Nothing has ever happened to restaurants ever like that. Nothing. And
But it happened to
it
all
would be,
restaurants.
it did. And it did happen to all restaurants. And it would be naive to think, to Joe's point, that the industry would have recovered even this fast from what happened during that period. There's still going to be a lot of companies. I mean, what do you have? Like, what's happened? Like, so many people are working from home right now, so people aren't living right in, or they're not commuting into urban areas anymore. Roti, which filed for bankruptcy on Friday, is probably that problem, right? Where they had a lot of urban locations. Well, if you got people are not going into work, they're not going to lunch anymore. So you have, situations like that. So companies have to adjust to that reality. You have, you still have a lot of companies that just, are financially damaged from that era. And a lot of locations are damaged. And then you have the combination of rising labor and food costs. You have weak sales this year, and you have, and then you have this situation where lenders and landlords want to get repaid. And they want their money, and they are no longer willing to tolerate whatever. And that kind of feeds into all of that. I kind of view this as almost another aftershock of the pandemic, where you had all of these repeated aftershocks. You had the supply chain and labor issues, and then you had now consumer reaction, and now you got bankruptcy filings. It's just like a series of aftershocks hitting the industry. And I think, frankly, what we're going to see next is a financing. The ability to get money for restaurants is going to be tougher for probably the next couple of years, if you want my opinion, because of all of this.
Even with interest rates going down?
Yep. Even with interest rates going down, because I think you're going to have private equity firms. A lot of private equity firms are backing away from the restaurant industry, right? And then you're going to have lenders are less likely to loan to the industry, and lending is still more expensive, even though interest rates are going to come down. It's just going to be tougher, I think, over the next couple of years to be able to finance.
The weird contradiction in all of this is that there are some brands that are doing insanely well. While others are filing for bankruptcy. Mm-hmm. And I don't really know how to explain that, whether the ones that are winning basically destroyed the ones that are losing or what. But it's a really strange environment, Wall Street aside.
Yeah. Well, look at Chili's. Let's just take one name, right? Like Wingstop, which what, Lisa, 45% 2-year comps? Is that how we calculate? 40, which by the way is underappreciated. People do not appreciate what Wingstop just did nearly enough. Not nearly enough. That was insane. If you imagine all the publicity that Popeyes got for their chicken sandwich, Wingstop should be getting the same amount. That was crazy. Anyway, but just go like Chili's. I don't think Chili's ever did 15% comps. If they did, it was like in the 80s and we were all wearing perms and
I wasn't born.
Dancing.
Me neither.
Okay. One of you is lying. And the other one
had a perm.
Anyway. God, punk. Anyway, it's been ages since Chili's did 15% comp, right? Where did that come from? We all kind of knew. I had a sense. Chili's was gaining some momentum going into last quarter. But to your point, Joe, about how upside down weird this summer has been. We have a casual dining chain that did 15% comp by basically saying, "Hey, we're better value than McDonald's."
And their value was a burger and fries. It wasn't like it was anything like wildly innovative menu-wise. It was a burger and fries, and it was doing so well that they kept it on because they were going to put a new thing in, but no, burger and fries works.
No, yeah, it worked. No, yeah. It worked marvelously. They took advantage.
It was a bigger burger. It was a bigger burger.
Yeah. Yeah, it was a better value. isn't that the point, Joe? Like it was the point wasn't, and it's a really good lesson. I think there's a real lesson in the Chili's thing. There is a great lesson for anybody marketing restaurants today, I think, is that it's not just about price. Value is not just about how much you're paying. It's about what consumers perceive they're getting for what they're paying. They will absolutely pay to eat at your restaurant if they think they're getting a good value. And Chili's, first off, Chili's I did the price comparison. I actually compared the prices. It's, it is, the price is comparable enough to McDonald's, especially in some markets, that it is a legitimate question. So what you get for that price is really, really good. It is a very good lesson in what you should be doing.
Mm-hmm. And it sort of had a snowball effect, I think. It wasn't just that they were marketing this 1099 meal deal. It's that they were kind of cheeky about it and really were aggressive going after the fast food prices. And I think it gave them sort of like a cool factor, which it seems like a lot of these brands that are doing well kind of have. And it's hard to measure. But, there are some brands that are just, they've been deemed cool. Like it's cool to go to Chili's now all of a sudden when it wasn't, a couple of years ago. But it's the same stuff. It's all the same food pretty much. So a lot of it just seems to be marketing. Really, I mean, Wingstop is another one. They're all over the airwaves, and they promote themselves well on the third-party delivery apps. But it's, at the end of the day, it's just chicken wings
or sandwiches.
Well, the sandwiches,
sandwiches,
yeah, they all forgot sandwiches, right? Chicken wings and chicken sandwiches, and they're killing it. They are just killing it. But so on the other side of the coin, though, is Chipotle, and that's the one that bugs me actually, because what they did, what was it, 8% traffic, 11% comp?
Yeah,
they should not have done that, and
right.
because everybody was screaming about portion sizes, they shouldn't have done that. So how do we explain Chipotle's performance last quarter, Lisa?
The loyalty that Chipotle has, and I have two sons who are there all the time, and so I see it, and I say to them, they'll come back and they'll say, "Oh yeah, they shorted me on portions this time." It apparently varies, by visit, and they'll go again the next day. It just doesn't seem to faze anybody, and that's what's so interesting about the way they've, developed this. There's kind of a Chipotle culture, and I'm afraid Cava, to me, has is going to be stealing some of that business because I've seen it in my own household. But yeah, Chipotle says they're going to deal with the portion sizes. I haven't really seen any evidence of anybody saying that they have necessarily, but I haven't seen, the complaints either. So they hit on the right combination of enough people seeing a great value in the plate. And that's fundamentally, people are going to fast food and they're seeing, like you said, the same prices, $1 more. They can get Chipotle or Cava or, not Sweet Green. That's a couple more dollars more. But, that's why I think fast casual is kicking it right now. It's just, it's all about what people feel like they can get. It strikes me as, ironic that a few years ago, Carl's Jr., remember, had that whole campaign around having the casual dining style, the $6 burger. Then they had to stop calling it the $6 burger because burgers were actually more than $6. But, now you have the casual diners and fast casual, saying basically, we have better than fast food. So come here.
Right.
It all comes around full circle.
I think Chipotle is losing or Chipotle is getting customers from fast food. I don't think there's any question about that.
Yeah.
And I think, it gets back to what we were talking about with Chili's, Joe, is that, if you're a consumer and, if I'm going to spend X amount of dollars, I want to get something for it. And, if I don't think that I'm getting the value, or I think that is gotten too expensive, I might spend a couple more bucks and get something I perceive to be better. So, it goes back to the point of what consumers consider a value. And they want something for what they're getting. They want to be excited about going. They want to get what they think is a good value, and they don't want to be, they don't want to pay too much for what they're getting. And it's a really interesting, it all makes for one of the more interesting environments I think we've seen. So, all right. Where is Mod Pizza at, Lisa?
I have no idea because the company that bought them will not speak to the press, and I have no clue what's going on. They laid off a few people, the top executives. They've kept a few people from last I heard. I mean, you said that Mod Pizza hadn't filed bankruptcy. I sort of felt like throwing in a yet because we still don't know.
I would definitely consider yet. I mean, you're going to have to close. I heard some people speculating about 100 locations.
Oh, really? Yeah.
Mm-hmm. Yeah. That they have a lot of tough locations, and at some point, you're going to have to consider some sort of action to deal with it. And I don't think you can fix it.
I think the fast casual pizza space I think that's going to be a challenge. It really is just, it's bigger than Mod Pizza. Blaze has been struggling too. They feel like they can kind of step in there now and perhaps pick up the slack of what Mod Pizza left, or they rework their menu and they feel like they can get things going again. And we'll see. But, then you have companies like One Table, which strikes me as strange because Tender Greens, is a concept that I think is still really strong. I mean, that's a brand I have always liked, and their food is just fantastic. And how they kind of got into this situation, it had to do with what happened after the pandemic and the merger or the addition of Takaya, which has been a bit of a drain because of some issues with delivery. And so they'll see a buyer, I hope, that may or may not be the lender. We'll see. But, they to me have more opportunity because I do feel like that concept is really strong, meaning Tender Greens.
Mm-hmm. Yeah. Yeah. Well, fast casual pizza is a tough spot. Pizza, period. Actually, I don't think pizza is tough. Pizza's tough right now. No question about it. Joe and Lisa, this was fantastic. Really appreciate you joining me this week on the podcast.
Thanks for having us.
Thank you, Jonathan.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Spoons. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. And you may subscribe on Apple Podcasts or Spotify. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening. Growing your business can mean big-time logistical questions like, how are we going to keep up with all these local deliveries? Let Uber Direct offer you a helping hand. With Uber Direct, you take orders on your website, app, or by phone. Then drivers who are part of Uber's courier network pick them up from your store and deliver them to your customer's doorstep. Sounds simple, right? Delivery just got better with Uber Direct. Learn more at uberdirect.com.